This video provides actionable tips on how to manage and motivate your investment brokers and their companies to work harder for your continued business and your investment returns. It's called the Golden Rule Investing Tactic. We show you proof that the old saying of she or he who has the gold still makes the rules can still be true. For compensation reasons that will become obvious later in this video, this underutilized crafty investing tactic is one that every wise investor should consider. First, here's the disclaimer. We do not recommend, represent, or endorse mutual funds, stocks, bonds, or any other financial instruments. We are not licensed brokers. Your mutual fund company or your broker gets a commission to review your goals and recommend solutions. We do not get paid at all if you buy anything from any investment company. We help start your mutual fund company due diligence by helping you easily get information from the top 100 investment companies at no charge. Since you're paying the same commission anyway, we recommend to get the best sets of professionals and drop the dud investment companies. This video shows you a way to identify the winners for you and, more importantly, identify and drop the duds, which can devastate your retirement investments over time. We help investors easily gather company information from the top 100 firms and connect them with new investment companies. One of the first challenges small and beginning investors face is the realization that every time you're convinced that you have the perfect stock or mutual fund to buy, the seller is just as convinced that now is the perfect time to sell the same stock or mutual fund at that price. The dilemma? Who's right? The most likely next step beginning investors take is teaming up with commissioned investment professionals at an investment company, which makes sense. Investment companies these days almost always have better and faster access to information than private investors. I don't see that changing anytime soon. However, many small investors and beginning investors somehow end up with a friend of a friend's broker working for an investment company or worse. Now, the big, scary, lifestyle-affecting questions that you need to be asking. You may want to take note of these 4 questions. Number 1, how do you know you have the best investment broker combination for you and your goals? 2, so you're now using just one of over 100-plus investment company options available to you. Is this a problem? It could be a huge and scary problem for you and your financial future. The good news to find out is the downside is small, and the upside could be significant. More on that in a minute. Number 3, are you getting the best return and service possible for your risk taken? Number 4, how do you know your investment company and your broker are working as hard as they say they are for you? The possible risk and result of complacency can cost you dearly. The clear answer is you don't know how good your current investment firm is. There's no way to know unless you can benchmark 1 or 2 new companies against your current firm. The golden rule for marketers is the A/B test. Investors and IT people call it benchmarking. Business people call it a smart business practice. You need to consider this option available to you. Even using investment company rating sites, it doesn't show your investment company and specific broker effectiveness, which is the key to your situation. Even just missing 1% or 2% of growth 1 year after another is absolutely devastating to your portfolio and your retirement lifestyle using time value of money calculations. Are they really working as hard as they say for you? Could be they are. You don't know. You need the most productive fit for you as possible. You have just one life, so you may want to take action to maximize it by hedging your bet. Here's how. Consider adding 1 or 2 additional investment companies to the mix to make competition for your business. Consider dividing your portfolio into 2 or 3 parts. Keep your company A, move 1/3 or 1/4 to company B, and move 1/3 or 1/4 to company C. Make sure all 3 companies know what you are doing to keep the pressure on them to perform. Use their egos and competitive spirit to your advantage. If this does not motivate one of your firms, then they may be the first firm you want to upgrade. Always upgrading is the key tactic. Like an NFL team, you cut the team down every year and keep the best performers to help you improve. In investing, at the end of the year or 2, I drop the underperformer and move that money to company D, and so on. Since this is the golden rule investing tactic, you can use any criteria you want to decide which company to drop. It's your money. Here's my personal example. I divided my portfolio into thirds. Company A, Company B, and I managed the third. Company B and I tied for 3 years. My original company A lagged by over half every year for 3 years. They always had a story or an excuse, so I didn't change. I lost out on thousands of dollars. Company A was very nice, but if I only used Company A, it would have been devastating to my retirement. So I finally moved my Company A funds to a new company, D. I upgraded. Don't let this happen to you. Hence the reason for the free mutualfunddirectory.org website. It helps investors with the next step in the process, finding the replacement companies with less effort. It helps investors diversify their investment companies with the next step in the process. Here are only just a few words on how this site fits into the solution and helps with the next to last step with this investment tactic. Again, the next step is finding new companies to work with. Here's an easy way to research the top 100 firms with just a few easy clicks. Our purpose is getting investment company information to investors. I know, if it's free, it's for me. As a totally free service, mutualfunddirectory.org lets you quickly gather your information by mail, email, or by phone contact from the top 100 mutual fund companies. Your choice of the type of contact per company. The top 100 mutual fund firms are ranked each quarter by the key metric of assets under management, or commonly called AUM. These top 100 investment companies are in one location with easy access to information on each. It helps you narrow down the companies for a short list so you can get their information with just a few clicks. Again, we update and compile the data every quarter after these companies release their reports. I think it's a very cool and useful site if you're an investor, with many future editions planned. Yes, for the past 3 years, we are still the #1 ranked organic mutual fund directory site in the world by Google Search, Mobile Search, Yahoo, and Bing. This is as of September the 7th, 2016. Our purpose is getting investment companies' information to investors. How to break the news to my existing company. I'm very sure that most brokers and brokerage companies are full of good people. However, your current company has zero incentive to tell you about the Golden Rule investor tactic. This will cut into their commissions and their sales goals. For some newer investors or people not in the everyday business environment, it may be hard to break the news to your existing company the first time. For other investors, it's just another business decision. Here are the 4 keys on what to say. Number 1. This is just a business diversification move for me. Number 2, if your company is as good as you say, you should have nothing to worry about. Number 3, this is just business. At least I'm not taking my whole portfolio from you. Number 4, I like the idea of companies competing for my business each year. What if your existing company convinces you to stay? If your investment firm or broker makes promises or changes you like, you may have already won. Congratulations. However, if not totally convinced or completely comfortable, go ahead and split your portfolio and upgrade to a better or an additional firm. You'll know if you're 100% sure. The key point to remember is that you still have the legal right to move half, 2/3, or all of your money to a different firm or two at any time of your choosing. If you decide to keep your existing investment firm, you will now have more leverage because they will know that you'll move your money if they do not perform to your expectations. If you're 100% certain you want to keep all of your money with your existing firm, you will know. If you're not 100% sure, erring on the side of splitting your portfolio may be the safer tactic. The last step in the Golden Rule investment tactic is to show you exactly how to move some or all of your money from one firm to another. See my step-by-step free blog on this topic. Go to mutualfunddirectory.org and then click on the blog called How Do I Transfer My Mutual Funds from One Investment Company to Another in the menu. Keep in mind, all firms are required by the SEC and FINRA to let you move your money. After all, this is the Golden Rule investment tactic. It is your money. If they don't act on your request, they could have dire regulatory consequences from the good folks at FINRA. See the full 100 ranked list of investment companies and investor blogs at www.mutualfunddirectory.org. To summarize the Golden Rule investing tactic, you want to spread your investment between 2 or 3 mutual fund companies. You want to drop the lowest performer each year or so using your criteria. To help speed up your information gathering process in researching new companies, we suggest you go to www.mutualfunddirectory.org to learn more. And the final step is moving your money to the new company you select. Our blog shows how the process works to move your money from firm to firm. If you like this video, please forward it to a friend, coworker, or family member and give us a like. And as always, have a profitable day.